All right, I am making this video because someone asked, what is my criteria for a power earnings gap? And it's pretty simple formula. I just want a stock that's going up more than 10% with 100% or more above average daily volume. So I'm looking at Supermicro, and I'd been watching Supermicro for a long time. It had been acting well during the bear market of 2022. But on this date, which is the greatest day of the year, November 2nd, I got to get this out of the way. November 2nd of 2022, this thing gapped up 12.5% on 484% above average daily volume, closed at $80, middle of the daily range. But I had been watching this, and when it did that, I definitely got intrigued. I had bought it a couple times and been stopped out again here at the 50. And you could see this is a serial gapper here on wait a minute, what date are we looking at here? I had November 2nd, boom, that was the first one, and then it gapped again higher back here May 3rd. This is after its earnings, I believe. 29% move with 28.27 with 382% above average daily volume. And then it gapped again on Nvidia's earnings report there on May 25th. So it's a 23% move, 266% above average daily volume, closed in the upper half of the daily range. And you can see what this thing has done since. And the reason why this stock is going higher is because of its sales and earnings growth. I know a lot of people like to think that they're just master chart wizards and the stock goes up because of the chart, but this one's going up because of these numbers here. Now you ask, what happened here? 5% drop in sales growth. Well, they had supply chain issues last quarter. So I'm really interested this quarter. They're going to report Tuesday. We'll see what they say about the supply chain issues. They're going to talk, I want to see expanding margins. You can see their gross margins here. They moved their manufacturing to Taiwan. So I'm expecting a little better margins. But anyway, the point is, these stocks that I'm looking for, power earnings gap, 10% move with more than 100% above average daily volume. This is IONQ, and it's gapped here. People don't want to buy. This is 21% move with 755% above average daily volume. And I understand people don't want to buy stocks that are below $10 because they're not supported by institutions, and that's fine. So this one gapped again and closed above 10. On May 22nd, you can see there 22% move with 320% above average daily volume. And this thing has been taking off ever since. It's up like 400% this year. Of course, it started with a lower dollar value. Supermicro's up, $260. This one's up, what, so $14, but the percentage is greater on this one, and that's all we care about is percent. So if you're not in this one, they report as well this week, I believe on Thursday, Supermicro on Tuesday. So I want to hear from these. Lisa Su said on her recent call that the data centers and personal computers were going to be the source of growth in the back half of 2023 and into 2024. And she is, I don't think she's one to lie. She's pretty much a straight shooter. And so I'm expecting that good things from the data centers going forward. All right, now here we have ELF, and how did I get hooked on to ELF? I'd been tweeting about this too with Supermicro because it had been performing really well during the bear market. And then the day after the greatest day of the calendar is November 3rd. And this one went up 15.43%, 300% above average daily volume, and closed 92% of the daily range. So like a hammer candle there. So ELF has done nothing but good things ever since, right? Just a serial gapper, you can see these, it sticks out on the chart like a sore thumb. There's February, 15% move. There's May, 20% move. And just last week, it made a 14% move. And what it did, I know the market is weak, but we're looking for performance, not excuses. And this thing, The low of this day was 132, and then on Thursday and Friday, it undercut that, which I don't like. You want to see performance, and I'm going to show you a couple of what I look for. But that is not what I look for with the ELF. I want this thing to perform, right? You want it to gap up and continue on higher and follow through, and that's what it had been doing. You know, you can see it didn't undercut here, and it didn't undercut here, but this time it did. So definitely something to watch there. Nvidia, you know, the most talked about stock probably. Anyway, you can see the big gap here on February 23rd, you know, 14% move with over 120% above average daily volume, and it did not you know, disappoint. This thing, talk about performance. And then in May was the big you know, forward guidance in with the 11 billion from 7 billion, and that's what really got the stock moving, 24% with 241% above average daily volume. And you can see that it's just formed this ascending base here. So looking for bigger and better things from Nvidia. Builder was one as well. This one I'd been tweeting about as well, because you could see during 2022, during the bear market, this thing was appreciating, making new highs. And so that stands out to me. But the real move here was this one here in May. And this is when the market was, you know, really ripping here. I think May 10th was the day the NASDAQ really took off. But this is a power earnings gap of 12% with 200% above average daily volume. And you can see it's just following its trend lines. Now, last week they reported kind of a muted response. Yeah, 1%, and then it undercut that low of that day. And then, I don't know. It's just a steady Eddie, this one. I wouldn't worry too much about it. This is one that I have held through earnings and not really worried about it. I'm a little more concerned about Supermicro this week because I'm holding more. Meta is another one. These are our top stocks at MC stock charts, by the way. And this is, you know, kind of how I found them. You know, they break out, you know, these power earnings gaps. You got to monitor these. I'm going to give you some at the end of this video. You got to write them down and watch these. This is a Meta Platforms, 23% move, 375% above average daily volume. Now, this one did undercut and formed a little base here. And then what happened? The next earnings report, April 27, 13% move, you know, 167% above average daily volume. This thing's just been one of the stronger stocks in the market. So this is why I look for power earnings gaps. They usually lead to good things, but with Celsius here, this one's bugging me a little bit. It had a nice gap on earnings, 20% move, 575% above average daily volume, closed in the upper half of the daily range. It undercut here. Wait a minute. No, it didn't. It just kind of traded sideways, though. I mean, the high of this day was 134, and it made a high here, 138. Now it's just at 142. So it's traded sideways for like 3 months. And they report Tuesday as well. So I'm expecting another one of these power earnings gaps higher, but, you know, the way that some of these stocks have been getting hammered, like Fortinet and Spotify, you really have to be careful around these earnings. And I understand that Mr. Dan Zanger, the great Dan Zanger, has had a lot of success in the market, highly respected. He does not trade earnings reports. This is Arista Networks, and you can see how wild and choppy this thing is. But it did have a power earnings gap here on May 25 of roughly 11% on 166% above average daily volume. Now this one, you know, ripped higher and then undercut the low of that day. And then last week on August 1st, which was Tuesday, when the NASDAQ, you know, is slumping this week, this one was up 20% with 330% above average daily volume. Like I say, you look for performance, not excuses. And this one, I kind of like the way it you know, making these higher lows here as the NASDAQ was just selling off nearly 3% last week. So ANET looks good to me. Okay, I talked about, you know, gaps higher and then following through. This is Vertiv. And I talked about the data centers, electrical power equipment for these data centers, right? And this one had a power earnings gap on May 25 as well. That was the NVIDIA day. So this one kind of got lost in the shuffle here, but 600% above average daily volume, and 14% move. And what did it do? The next day it was up 6%. The day after that, it was up 2%. That's what you want to see in a power earnings gap right there. just follow through, power higher, and it never undercut this low. Kind of traded a little cautious into this earnings print last week, and what did it do? It ramped 29% higher with 500% above average daily volume. What did it do the next day? It was up a little bit, and on Friday up 3.5%, and it's following through just like it did here. And I believe this thing's going to be, I mean, if you just take a step back and look at these big blue bars, you can see that institutions are buying this stock, and this is the recent buys here. So this looks very good. You can see it breaking out of this stage 1 base here recently. So definitely one of our top stocks now, and we're going to monitor that one. I do own a little bit of it. Not that it matters. Not trying to influence anybody. I know you all have mouses and just click away like wild banshees, but this is Modine, and on the 25th again, a 23% move with 200% above average daily volume. I know what you're thinking, air conditioning, HVAC stock, what the heck? Only trades 627,000 average daily volume. But hey, I don't care if it's air conditioning, ice cubes, I'm going to trade it if it's going to make these moves. And this just sticks out to me, that kind of a move. And then last week it did it again. 13% move with 166% above average daily volume. And while the NASDAQ was selling off, it followed through on Friday with a 3% move. So definitely put this on your watch list. I mean, if you haven't already. This is what I'm going to do now, is just go through some stocks that did recent power earnings gaps that you should monitor. This is Freshworks. If you need a fresh idea, check out Freshworks. 18% move, big volume, undercut the low. I don't like that. Like I said, don't make excuses. We're looking for performance, not excuses. And this one is, undercut the low of this day. So I'm going to watch it, but I don't like that action when they undercut the lows. And this is Boot Barn. It did the same thing. Power earnings gap and then undercut the low. It's not the end of the world. It's something to watch, but I would rather see it power higher like you saw with Vertiv and ELF and Supermicro and those types of powerful stocks. This is a Boot Barn. They sell boots. Imagine that. Anyway, nice 13% move with nearly 200% above average daily volume. Undercut the low of that day, though, on Friday. So still one to watch. Another one that I used to make fun of because, it just was gapping down and gapping down. And the software stocks were doing that. You can see these big gaps down here, big gap down here, big gap down here. And it just gapped all the way down to, the sellers got exhausted. And then it started making its move, had a big gap up here, which, should have put it on the radar there. 15% move with over 500% above average daily volume. But all it did was get in this consolidation period. And last week it blasted higher on Thursday. A real big move here of 23% with 257% above average daily volume. So it fits the criteria. What did it do the next day when the NASDAQ was weak and selling off? This thing moved, 3.5%. So definitely watch this one. Put it on your watch list, write it down. This thing qualifies. Another one that I really like is INFA. Some of these smaller software stocks, gapping out of these stage 1 bases, they can be very lucrative. So that's why I'm watching this one. That was a upside surprise on an earnings gap, and it was up by 16% with 300% above average daily volume, and then followed up the next day. When the NASDAQ was weak, it was up nearly 2%. So that's another one that I liked. Write that ticker symbol down. This is OLED, and this one gapped on Friday. So definitely one to watch. Electronic miscellaneous products. To be honest with you, I don't know what they do, but I think it's something for the electronics market. How about that? Brilliant. 13.75% move with 258% above average daily volume. So it definitely qualifies as a power earnings gap, and definitely one to watch. You can see this. Let's look at the weekly here. Really like looking at the weekly charts before getting too involved. Yeah, gapping out of a stage 1 base here. So you can see that, like all the sellers get washed out, and some speculators come in, and then it consolidates, and then it has a nice earnings report and starts moving higher. So definitely one to watch. I'm just going to quickly go through some other ones here. This is Carlisle. This one gapped higher back here, I believe, with volume. Yeah, anyway, Carlisle's one to watch. I can't find the date. I just wrote it down because it's been on my list for a while. This looks like the big volume day, but it didn't move much, did it? This one here, Carlisle. Come on, Carlisle. Yeah, it's not much of a move. Oh well, I don't know why that's on my list. And OSK, this is a truck, heavy duty truck parts, I guess. I don't know. Oshkosh Corp. I thought they made you know, like baby clothes, but I guess not. 10% move, 252% above average daily volume. But that's not the important thing. Look at the follow through the next day. You know, like I said, the indexes were weak last week, and this thing kept powering higher. You know, not big moves, but it's going higher, and this is performing. Beautiful cup with handle base there. So yeah, definitely one to watch. You see that stage one base, and now it's gapped up and powering higher. And these things have a tendency to go higher when they do that. SOFI is the last one I'm going to look at. This one I'm just kind of very disappointed with. Is it gapped higher on Tuesday, I believe, or Monday? Yeah, Monday. After their earnings report, you know, 20% move with all that volume. And what did it do? It just came back to its buy point there at 950. Just a real bummer. If you're long SOFI, this thing's got to be very frustrating. You can see that the you know, the big sell-off during the bear market, he had this consolidation here, consolidated for a long time, and now it's starting to try to move. But man, that bar last week, that's a bummer. Back to 950. But I'm going to keep my eye on it. A lot of people like that stock. It's got good sales growth. But anyway, that's it for now. We never give up. Like I say, you look for performance, not excuses. And these stocks are going up because of their earnings, not because of the chart. You know, this is powerful earnings by Super Micro. You can see Alpha has been going up for a long time. It's just consistently growing, you know, quarter after quarter and year after year. If you look at these numbers here, you know, last June, you know, 39 cents. This June, $1.10. You know, 182% growth. You know, 70%. You got triple-digit earnings growth. You know, 70% sales growth. That's why the stock's going higher, not because of the chart. Anyway, thank you for watching. We never give up.